Welcome back to the Climb Finance Show. I'm your host, Ian Lynch. In this show, the Climb Finance Show, we discuss investments, markets, business, finance. Today we're going to discuss the Federal Reserve and the latest decision by the FOMC. So let's get into it. How's everyone doing? I hope everyone's doing great. Aiming for a relatively short video today. So let's just talk. Let's talk about it. So this past week, there was a Federal Reserve FOMC, Federal Open Market Committee meeting where they announced the latest and greatest decision for interest rates. If anyone's, keeping up with the markets for the last year, you know that they have been hiking or increasing interest rates at a steady pace since March of 2022. And it looks like it could be coming to an end somewhat soon, but let's dive into this. So here we have a CNBC article written by Jeff Cox, published Wednesday after the Fed release at 2 p.m. on Wednesday, saying that they held interest rates steady while also indicating that it expects one more rate hike before the end of the year and fewer cuts than previously indicated next year. So this is what's known as a hawkish move by the Fed. But at the same time, the Fed revised upwards its economic growth. So relatively bullish, but at the same time, a little bit hawkish. Not going to read all this here, but essentially, if the Fed goes ahead with another additional interest rate increase this year, it will make a full dozen hikes since policy tightening began in March 2022. Markets had fully priced in interest rate hold this meeting. The S&P 500 still ended up falling 1% after this news. Surprising enough, because it was priced in the maintenance of interest rates, but this surprise potential rate hike for this year is kind of caught the market off guard. So here is the press release from the Federal Reserve. Not going to read all of this. They essentially said economic activity has been expanding at a solid pace, but they're still attentive to inflation risks. And they seek to achieve maximum employment and the inflation at 2% over the long run, which are a couple of the mandates of the Fed. And they decided to maintain the target range for federal funds rate at 5.25% to 5.5%, which was expected. They put out statements every meeting, which happens usually once a month, sometimes every 2 months. But interesting enough, the statement they put out is always so similar. This shows the changes from the June meeting to now. Basically the same statement, and this is not rare. It's always so similar, except for a few key words they change, and it's always so important to analyze what they change and why they are saying certain things. The Federal Reserve is fully aware of the power they have with their words. What they say changes the economy, the stock market, inflation expectations. It impacts everyone's 401ks, your investments, even your savings. And they're aware of this. So that's why we need to really analyze what they're saying. They say economic activity has been expanding at a solid pace instead of moderate. So that's a stronger terminology. Job gains have slowed instead of been robust, but still remain strong. Pretty bullish terminology. Everything else is the same here, except for the committee decided to maintain the target rate at 5.25% instead of at the last meeting when they raised it to 5.25%. So all pretty solid. But what about this last, potential rate hike for this meeting? Here we have what is known as the dot plot. It's essentially the Federal Reserve FOMC members communicating what they think interest rates are going to be at for the next few years, 2023, 24. And the biggest takeaway here is currently interest rates are right at this level in between here, 5.25 to 5.5. You see several members have selected that for the rest of the year. However, majority have selected 5.5 to 5.75 as the appropriate range, with interest rates coming down in the next few years, but they have indicated one more rate hike for 2023, and that has kind of caught the market off guard slightly. We'll talk again about the stock market. As I said, this came out 2 p.m. Wednesday. This is the S&P 500 for the past week. At exactly that moment, 2 p.m. Wednesday, things really started going downhill for the market. So the market was caught off guard with this additional rate hike. It's not the end of the world, I don't think. This is a really interesting tool. I'm always kind of referencing target rate probabilities for the next Fed meeting, November 1. 75% at the current rate, 25%. This is what the market is pricing in. Normally the market is the fastest, best, most efficient player in the game, the aggregate market for assessing interest rate probabilities. But they're not necessarily buying the Fed increasing interest rates at the next meeting. There's a chance, a quarter chance, but that's not really that high. If you take a look at December, it's slightly higher at 35, but even still not. So and then there's a 5% chance that they increase it additionally beyond what any FOMC member indicated in the dot plot. But still, the market generally believes rates will be maintained at the current pace. So they're kind of saying to the Fed, we don't believe you and your dot plots. However, as I mentioned, the S&P 500 is down, so people are kind of hedging against this chance of another interest rate increase. But all in all, it seems like it's like the market versus the Fed. The Fed said we're going to do one more hike. The market's saying, I don't really think you are, but you might. So we're going to take some of the gains off the stock market, which has been really strong this year. The Fed seems to be winning this tug of war with, as I mentioned, stock market being down 1.5% this past week since the decision. But all in all, it does seem like the Fed is almost finished with the interest rate increases. And is this all going to come to an end? I mean, the stock market got pummeled in 2022. Then it's rebounded strong. Is the Fed almost done hiking rates? It seems so, as long as inflation can remain under control, a bit tamed or even decreased towards the end of the year. Time will tell. What do you think the Fed is going to do? Will they raise interest rates? What is your prediction? What do you think about the markets? Let me know in the comments. Thank you, everybody, for listening. And have a great day. The Climb Finance Show, we are out.